I think the company, of course, would say it's a win. And when we talk about lowest ever growth, we're still looking at 27% year-on-year growth for Singles Day in yuan terms. And, you know, that, of course, is slower than the 39% recorded last year. But we've got to remember, this is the 10th anniversary of Singles Day. And I think there will come a time, this perhaps is it, where those 30-40% year-on-year growth rates for Singles Day starts to slow. Of course, you had this year the added effect of some of those macroeconomic headwinds, the US-China trade war, the increased competition here in the e-commerce space in China, and of course Alibaba's own problems with its falling share price, which is down nearly 16% year to date. Joe Tsai, one of the co-founders, actually addressed reporters yesterday evening before the final figures came through and talked a little bit about why he thinks the share price is down so much. Let's listen into what he had to say.
I think a lot of investors get it wrong. Number one, China is not as bad as people think. And number two, Alibaba has some unique aspects. We're really riding that secular trend. And when you talk about, you know, digitizing the economy, Alibaba is uniquely positioned with technology and know-how to help enterprises to digitize their operations so that they can serve their consumers better.
To kind of diversify a little bit more away from China, the company's really been investing in other key markets around Southeast Asia. It's got a majority stake in an e-commerce platform called Lazada, which is based out of Singapore and serves a lot of Southeast Asia. That, for the first time, was involved in Singles Day this year, offering huge discounts as well. Daniel Zhang was talking a little bit about the continued growth of Lazada and in Southeast Asia, and he said that actually new parts of the business will continue to be involved in Singles Day, and that will continue to help the Singles Day GMV, or the gross merchandise value, a key metric that the market looks at, to grow in the future. Let's listen into what he had to say.
I've been thinking about what the future of Singles Day is. Many people are also asking me this question with curiosity. I would like to say that the future of Singles Day will step forward based on 200 billion renminbi today, and it will become different for sure. Only with a difference, we can step up to 300 billion renminbi, to 500 billion renminbi, and then to 1 trillion.
Alibaba's pitch, of course, is that this secular trend of the middle class is coming online, consumption to continue to increase will help it continue to grow in the future. And of course, its unique pitch is that it can help foreign brands sell into China. Actually, there was a few stats that have just come in moments ago. Apple was the top selling mobile brand on the Singles Day itself. Starbucks managed to break its own record and achieve its highest ever sales on Singles Day as well. So there's clearly some success stories that Alibaba will continue to talk about to try and get more brands involved in this and try to continue the growth to bring some of these foreign brands into China. But of course, there's many headwinds that face this company right now, and it'll be interesting to see whether this Singles Day gives investors something to cheer about when shares open later on Wall Street.
Arjun, nice to see you in Shanghai. And I missed you at Web Summit this year. One of the big themes that jumped out was really around the handover and growth to some of the small technology players, because I don't think any of the questions around growth and the pushback from regulators has been addressed by these big technology companies. It seems like for investors, if you're focusing on technology, it might be to chase some of those small startup businesses that's starting to scale. What are you seeing in China? Because I think there was a recognition that China is a completely different ballgame because of the backdrop with the authorities, the government, and growing these fairly large technology companies, so that China is shielded, in a sense, from Silicon Valley and from anything that Europe may grow.
Yeah, I missed Web Summit too, Karen, and shame I couldn't be there. But you're absolutely right. The Chinese market's very, very different. What you're seeing here is the large companies, the likes of Tencent, the likes of Baidu and Alibaba, they've grown relatively unchecked in this market. But in the past couple of years, you have seen the government crack down a little bit further on things like online advertising, now with Tencent around gaming and mobile. But the key here is that these companies have absolutely enormous scale. I've been here now for about 4 or 5 weeks experiencing the fact that you cannot live without WeChat, you cannot live without the likes of Alipay here. You're paralyzed without these services. And of course, what you're seeing is that these large technology companies in China are either requiring or getting majority stakes in many of their challengers, not only here in China, but across the rest of Asia as well. And that's a big trend we're seeing here. Tencent is one of the most prolific investors in China. into technology startups. And I think that makes it very, very difficult for some of these new startups to challenge the big giants here in China.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.